So in this video, we're going to look at how much money I made last week. In particular, how much money I make trading Nvidia as it dropped nearly 20% over the last 5 days, and how I took advantage of this selling options. So if you like the sound of that, all I ask for is that you smash that like button and don't forget to subscribe. So if we look at my activity statement, I've selected last week, and what we're going to do is look at how much money I made. Now, one thing you'll notice is you don't see any dividend tab over here, and that's because I didn't receive any dividends throughout last week. And if you stay tuned to next week's video, I'll be doing a full roundup of my high yield dividend income and my options premium income as a total of how much I made throughout the month of January. So again, make sure you subscribe and stick around for that. So what we're going to do is we're going to go look at the trade section. Now, the first thing you'll realize within stocks is that on the 27th of January, I initially bought 5 shares as Nvidia dropped down to $117. Now, when I actually looked at this, I was thinking to myself, as you can see, between 130 and 336, I was like, you know what? I'm just going to buy 100 shares of Nvidia at this price because it is at such a good value, in my honest opinion, that these drops don't come around soon. So not only did I end up buying 100 shares, I bought that 100 shares on margin. So again, if we look at my net value account here, you can see that my account change from the 24th to the 31st, you can see here that our cash is minus 9,882. And that's primarily down to my buying Nvidia and therefore increasing my margin number. So that's what's happened over there. And I've done a number of trades, as we'll go on to in a second, this week in terms of options in general. However, in particular, what I want to show is how much money I made through the Nvidia option trading that I've done, and also the covered calls I've done, because I know there was a couple of comments on my last video about covered calls, so we'll go into some of that and what does that look like in terms of the premium I've selected. So if I scroll down here, you will see these are all my options trades that I've done. And again, I'm not going to go through into this in a lot of detail, but really the key thing to take away from here is in terms of cash collected, I made $2,114 just last week. So over $2,000 trading options or selling options predominantly and generating that premium. Now, what I've done is I've downloaded this whole statement and I've put together all the options trades that I did for that week. So if we add up the proceeds, you can see it adds up to 2114, which is the amount over here. So this is just all of these options trades into a Google Sheet. Now, what I want to do is show you guys what does that look like for Nvidia. You see a lot of Nvidia over here. So what I'm going to do is just clear all of them and just type in NV and select all the Nvidia trades. So just remember, I made $2,114 in last week in all my options positions, and I made $1,489, which is around 70% of the total amount that I made last week. So I was not even planning on trading Nvidia last week, but I saw an opportunity. I saw the 20% drop. And for those of you who don't know why Nvidia dropped 20%, it was largely down to China releasing their AI version of DeepSeek, and also just recently, yesterday on the Friday, where Trump is tightening controls with tariffs and stuff on China, which impacts Nvidia negatively for the amount of sales that they do in China currently. So again, do I think it's an overreaction? I personally do, which is why I bought 100 shares of Nvidia, and which is why you can see majority of these are selling puts on Nvidia. So for example, we had 2 puts expiring on the Friday. So I placed these trades on the Tuesday and they were expiring on the 31st, which was the Friday. And if we look at the total proceeds that I made there, made $246 on a 3-day trade effectively, where I sold puts at the 100 and 110. And again, I think Nvidia closed around, 120, 122, something along those lines. So Not only that, is I was doing those types of trades and generating income. I was doing short-term trades, which again, it's not necessarily my style. I don't necessarily do short-term trades. I normally do monthly expiration cycle trades, but I saw an opportunity. The implied volatility increased. And I'll be honest, I wouldn't mind owning more shares or 300 shares at 3 contracts at the 110, 100 if the worst case was to happen, because again, I see it as an overreaction into the market. Now, one of the things I want to show you guys or walk you guys through is the covered call strategy. And again, I know people have asked about it for my Tesla positions, which I'll do, but it's just Nvidia was just so much in the news last week. I just had to take effect of it. So if I scroll back up here and go to my open positions, you will see Nvidia, 100 shares. My cost basis is around $118, 117.9. It closed at 120. So I'm already up on the position for $209. This was up at around $1,000 at its peak when I was looking at it. And I was debating whether or not just to take it off the table, pay off my margin, make a quick round, all these different things. But I thought, you know what, no, I want to keep this at the moment. And if it does drop lower, I'll end up thinking I wish I did sell the shares. But as it stands at the moment, we are up $209 on this position. But the key thing I want to explain to you guys is I own 100 shares of this stock. Let's call the cost basis $118 just to keep the math simple. And if I just go into these ones and get rid of all the puts so you guys can see how this works. So what I did, if we look here, I bought the shares. It's got the date on it. It'd be in the trade situation, wouldn't it? So let's get to trades. So I bought the shares on the 27th of January. So on the 28th of January, and remember, it was at $118 cost basis. I sold a covered call at $137 for $53 premium after commissions, around 52.4. So what does that mean? That means I'm opening an options contract saying I am willing to sell 100 shares, because it's one contract, of Nvidia at a strike price of $137 on or by the 31st of January 2025. So when you sell a covered call, you always sell it above your cost basis or at your cost basis, or 118 would be the minimum I would sell it at. But because I wanted to keep the shares and I had an assumption that Nvidia was going to continue to go up, I did it quite far out the money at 137. So if I do 137 minus 118, it's a $19 out the money. So if Nvidia closed at 140, for example, I'll make my $53, and I'll also make $1,900, which is 137, my strike minus my cost basis, so $1,900 additional appreciation on the shares. I wasn't looking to get rid of the shares, which is why I did the 137. If I was looking to dump my shares, I would have done something a lot closer to the current price or my cost basis at 118, and potentially the 120 or 122, 125, etc., etc., because I would have generated more premium than the $53. So that's exactly what I did. So then what happened was, so look here, this is the open position here yet, is I sold this for $53. And then on the Friday, the 31st, so the date of expiration, I bought back the option for $1. And simultaneously, which is why the date and time is exactly the same, so it's what we call in the industry as a roll, I closed the option and buy to open a new option, is I sold the 135 call, and Nvidia is trading at 120, I think it's trading about 120 right about now. And I opened that up at $74. So if we add these two together, net, it was a $73 roll for rolling it out for another 7 days to the 135 strike. Now, it could potentially get to the 135 strike in the next 7 days. However, I think there's probably a little bit more pain ahead for Nvidia, if I'm really honest. So I don't think I'll get there. If it does, it does, and I'll cross that bridge when I get there. In terms of do I roll it again and try to move my strike up to the 140 or the 145, whatever that may look like. A lot will depend on where Nvidia is in relation to my strike price when I decide to roll the option. So in that week of the $1,500 I made of Nvidia, it's not a lot. It's $126 is basically from the covered call. But you can use this 126 in a number of ways. Like you can say that I can now reduce my cost basis of 18 grand that I spent on Nvidia, reduce my cost basis by $126. I've reduced my margin by $126 because I spent 18 grand or borrowed money on getting Nvidia. So there's so many different ways that you can utilize this. But this for me here is something Nvidia. The good thing about Nvidia, I can do weekly covered calls to get consistent income. And the way I like to define this is like I rent out my stock. So it's like owning a property and keeping it vacant. That's how I believe if you just hold stock, especially if you've got over 100 shares, you're just holding it, which is why you'll see in my options, I own Riot stock, I own Tesla stock, I now own Nvidia stock, I own IWM, I'm trading IWM as it currently stands. Again, selling puts on Misty because these are ones that I want to buy at lower prices. So again, it's not a lot of money. It's $42, but it's $42 of getting Misty at 20 when Misty's currently trading at 24, 23. So it might hit that expiration. It may not hit 20 by the February the 21st. We'll find out in the next 20 days or so. So again, this is where I'm chipping away, doing very basic option strategies and some more advanced strategies, which again, I'll be sharing a lot more details into these strategies shortly. So I'm actually creating a guide on the option strategies that I use to generate results of, 2 grand in a week. So again, make sure you subscribe, stay tuned. If you've got any questions, please comment down below, and I shall see you guys in the next video.